Hey, howdy, friends. It's Steve DePoe here with the Rose Realty team with this week's real estate vlog for North Texas. Hey, today's topic is preparing to purchase a home. Okay, now look, if you've been listening to me since July, you know that there's this sort of perfect storm happening right now that if you haven't taken advantage of it or starting to take advantage of it or thinking of taking advantage of it, then you know what? I'm not sure what else I can say to help you. Here's a fact. Okay, take a look. Take a look at these two. Take a look at these two images here. That home sales. Let's talk about mortgages. Mortgages decreased leading up to 8 of the last 11 presidential elections. Again, one more time. Mortgages decreased in 8 of the last presidential elections. Only makes sense, right? No matter what party's in charge of the White House at the time, they want things to look good going into the election so they can say, hey, look at all the things I did for you. Whether, we had inflation or stagflation or deflation or whatever, leading into the election, they can say, look, we lowered the interest rates. People are out there now using their credit cards, getting car loans, getting mortgages, et cetera, and everything's really good. Reelect us, okay? Smart. I would do it, okay? Another fun fact, okay? Home prices went up in 9 of the last presidential elections, okay? Just after 9 of the last 11 presidential elections. Okay. Now, so what happened? What does that mean? That means that people waited to the election, home prices were down, and then bam, the election happened, and they said, well, let's raise the price of our house and sell our house. Okay. Well, the interest rates are a little bit lower. They don't go up immediately. So interest rates go up a little. Interest rates are still a little bit lower. People raise the price of the houses to take advantage of the interest rates and more interest. And now you have a lower interest rate. Hey, great. But now a higher price house that you're looking for. Yes, the truth is that you might get a little bit more for your house because you raised your price, right? But if you're moving up the ladder and you're going from a $400,000 to a $600,000 or $700,000 house, that percentage going up, let's say the price of the house goes up 5%, that 5% of that $700,000 house is 35 grand, and that 5% that you're going to raise your house, your $400,000 house, is only 12 grand. So in essence, you're going to be paying $22,000 more because you waited. Okay, so I don't know what else I can say. This is the perfect time. Run out there, give us a call. Let's buy a house, okay, to take advantage of this. This anomaly that happens. Okay, so what do you have to do in order to prepare to buy a house? Number one, the most important factor is your credit score. Okay, you might see ads in the paper. You might see ads on TV. Our rate is 5.26% or something like that. That's with a perfect credit score. Okay, that's usually a 30-year fix with a perfect credit score. Okay, something in the 750s and above. Okay, and so the most important thing is your credit score. Fix that, improve your credit score. You can do like little things to sort of cheat. So let's say you went out to your credit union, okay, and you said, hey, I want a $5,000 loan, or I want a $10,000 loan, or something like that, and you took that loan and then you paid it off over a month. Well, you've paid it off. You haven't paid any interest rates on it because the interest rates don't kick in yet, right? And now you have another mark on, another star on your credit report that says, hey, you know what? Steve took out a loan and he paid it back. Okay, so credit score, number one, most important. Second, determine how much you can afford based on your income, your expenses, your potential mortgage, etc. There's mortgage calculators out there. What I suggest, though, really, I mean, seriously, is find the mortgage lender. Okay, give me a call, drop me an email, send me a text. We've got 2 or 3 mortgage lenders that we work with that we would recommend. One just closed with on a client of mine where he was unhappy with his original lender. Started talking to this guy. Bingo, bango. This guy's living in seventh heaven. He got a great rate. They helped him out a lot. You know, what else can I say? So talk to a lender. Tell them, hey, look, you want to kind of figure this out, okay? Start to develop that relationship. And then when you're ready to buy, hopefully in the next 2 months or so, then bing, bang, you're ready to go. So you know how much you're looking for. You're not wasting your time looking at $1 million house where you can only afford a $600,000 house, okay? So find out how much you can afford. Before we go any further, hey, need you all to do me a favor. Go to our YouTube channel, and if you're watching this video, you're probably already there. That's youtube.com/@moving-to-Dallas, Texas. That's our YouTube channel. We've got all of these vlogs archived. We've got information on houses that we've got listed. We've got educational stuff there, and it really benefits you because you'll have access to this archive of all these vlogs and videos that I've done. Plus new stuff that you get alerted to new stuff when it comes up, and it's really a benefit to you. You'll be like the first one on the block with this information. Kind of helps us out too, that it kind of moves us up the food chain there in terms of YouTube. But you know, being a subscriber and knowing when these videos come up, these vlogs come up or videos come up or whatnot, will really benefit you. So hey, look. We really appreciate it. We really want to thank you and appreciate you for doing that. Okay, next step. So a lot of people are hung up on the 20% down to avoid PMI. Look, a lot of people like to put at least 20% down so they don't have to pay the PMI. The PMI could, depending on the price of the house and all of that, could rank somewhere between a couple, $100 to several $100 a month extra. That's money in your pocket, right? So obviously putting down 20% could be real beneficial. However, there are instances, and you'll have to talk to your lender, where not putting 20% down, putting down something less, 5, 10, 15%, right, is actually more beneficial because of the mortgage instrument that you'll get, the rate that you'll get, maybe some the state of Texas programs that you'll be able to apply for, those types of things. So the really important thing is this: gear your head to putting down or saving that 20%. Okay, but most importantly, like I kind of just said, talk to a lender, get a lender involved, and understand what the lender would like you to do. You don't have to use that lender. You can use somebody else. I could recommend you to somebody and you can go, to some other lender. But understand what the best thing for you would be, what programs that lender has, so that it benefits you and your family, overall. Okay. What the lenders are going to do, they're going to really consider your debt to income ratio. Okay. So it's really important that if you can, to pay down some of your debts to improve that ratio. So if you've got long-term credit cards, you've got what a lot of us have done in the recent past is buy stuff like maybe furniture, cars, appliances, with nothing down, and at the end of, let's say, 50 or 60 months, if you make your payments, you don't owe any interest, that kind of thing, that's still a debt. Okay. So if you did this with Lowe's for a washer dryer, and the washer dryer costs like $2,000, then it might be beneficial. Talk to your lender again. It might be beneficial to pay that off rather than putting that $2,000, towards that 20%. So you got to talk to your lender, not your financial advisor, okay, but your lender, who will say, hey, here's all these things, here's what the mix looks like, and here's the things you should do in order to make it more beneficial, get a better rate, etc. When you're talking to that lender, get a pre-approval letter. Okay, this helps in two areas. Number one, okay, it helps you to understand that here's your cap. Based upon all of this stuff in the mix, that now you're able to afford XYZ house. Okay. You're able to afford a $675,000, a $700,000, or $400,000, whatever. Okay. But you're able to afford house X based upon the current situation. Okay. That's number one. So it gives you some guidance so that when you give me a call and your letter says, hey, you're able to afford, a $700,000 house, we're not going to look at 750 and 800 and $900,000. We're looking at 700,000. Okay, that's number one. Number two, okay, when then we put in an offer on a house, okay, contingent or not, and we have this pre-approval letter. Hey, Sam and Joanne, are pre-approved for $750,000. That's great. And now when I put an offer package together for somebody's listing that you want to buy, I'm going to throw that letter in there, and it's going to say, Sam and Joanne are pre-approved for this mortgage. Then the seller and the seller's agent and the seller's broker say, hey, look, they're pre-approved. This is great. We're not just taking a flyer on this person. Okay. We know that they're pre-approved. We know that they can afford the house. And unless they do something kind of silly, okay, along the way, they're going to get this mortgage for this house. Okay. It really helps everybody, but it helps you because now you don't, now that you have a better, if you're having in a competitive bidding situation or there's multiple offers in, then the person with the pre-approval letter has a better chance of getting that loan and winning that house than the person, without the letter. Hey, so think about some of your priorities, such as where's work located? What's the school quality? Where are they located? What are some of the amenities? HOA or no HOA? What about the area in terms of safety? You can start researching these neighborhoods, and if that you're thinking about moving into, and if you need information about these things like safety and police reports and the quality of schools, give me a call. We can help with that. We have access to that kind of information. But so the thing is, unless you're going to send, as an example, unless you're going to send your kids to private school and they're already in that private school, and your child is in the fourth grade going into the fifth, and they're going to stay in the same school no matter where you move to, that kind of jazz, then you don't kind of care about the quality of schools, except for when you resell the house. Okay. But for your immediate needs, you don't necessarily want or don't necessarily need that information if you're sending your kid to private school. Proximity to work is always important. We know there's always construction around North Texas here. And safety is important for everybody. Okay, so we don't want to move into an area that's that's got a certain amount of crime and this and that, etc. And so we want to know what some of those facts are. Besides the down payment, like I mentioned before, there'll be closing costs, and closing costs will come to roughly 2 to 5% of the home's purchase price. Okay, so you're going to have to save that. There were some lenders that will let you roll that into the mortgage, depending on your debt to income ratio and the appraisal of the house, et cetera. But those are some of the things you're going to have to consider. So if you're that's again go back to that $700,000 house. 5% of that is around 35 grand. And then so you'll need potentially around 35 grand in order to close on that house. And that part of that is, closing costs and appraisal costs and, et cetera, application fees. And so that's something else that you'll need, to consider going into closing, to make sure you can write that check, that you have that in the bank. And be prepared for other kind of home ownership type of costs. Some of those closing costs will include, paying property tax in advance, homeowners insurance, There's also going to be naturally maintenance on the house. Hey, if you own a house now, you know what some of that maintenance is. But if you don't own a house, maybe maybe you just moved here from Iowa or something like that, and you don't know what the closing costs, what the maintenance costs are in Texas and those types of things. You may have to do some maintenance on the house and kind of fix it up and whatnot. But you also, so what is basically saying here is you want to understand that you might have those additional costs involved, and you might want to have that in reserve, so that once you close, you can do some of that maintenance, or you have to pay that homeowner's insurance up front, or some homeowner's insurance have you escrow that money, along with property taxes and HOA dues and all of that. So those are some other things, other costs you have to kind of have to consider. So I kind of hope that was helpful. Like I said, now's a great time. I mean, the Fed just lowered the interest rates 50 basis points, if I'm not mistaken, a couple of weeks ago. They're talking about doing that again around mid-November. Okay, so now is the time. I mean, if you're thinking about buying, now's the time to do it. I don't, I can't say it any clearer. Don't believe me. I'm just a real estate agent. But you know what? Research it. Research mortgage interest rates, presidential elections, and then housing values, presidential elections, and see that the rates have come down before the election and prices have gone up after the election. And so it's kind of a lagging indicator, a lagging effect. And so now is the time. Interest rates are lower. They're lower now than they've been in the last 4 years. Okay, so interest rates are lower. Housing prices are stable right now, expecting to go up probably December, January. So now's the time to act. So bam, let's kick this pig and let's get going. Hope that was helpful. Sorry if I offended. Next week, we're going to talk about preparing for a home sale. So we'll take the opposite or the contrary view and say, okay, so now I'm thinking about selling my house. Bam, what are some of the things I should do now in order to prepare my house for sale, in November, December, or January? This is Steve. I am with the Rose Realty team. So long.